Hi, my name is Melanie Beach and I'm the director of the Salon Expert Accountants, and in today's video I'm talking about the differences between limited companies and sole traders and the pros and cons of both. So hopefully this will help you make a good decision as to which is the best business setup for you and your business. So firstly, what's the difference between a limited company and a sole trader? So a limited company is a separate legal entity to you as a person. So this means that when you set up a limited company, the company owns all of the income and all of the assets. It also means that you can have more than one owner very easily. So if there's 2 or 3 or 4 of you, it's much easier to do this as a limited company. And when I talk about the company owning all of its income and assets, what that means is that the money that is in the business account belongs to the business. It doesn't belong to you as an individual. And that means that you do need to keep a closer track of where money has come and gone from the business. The second difference is that as a limited company, as the name suggests, you have limited liability. So all the owners of the business, the risk for you is limited to the money that you put into that business or your investment. So any debt that the business has belongs to the business, not to you as an individual. So if for any reason the business fails, you won't be personally liable for the debts that the business has. It also can mean that if, for example, the business is sued by someone, your personal income, your personal assets are protected, which can be a great benefit for limited company owners. The third point here is that as a limited company, we register the company with Companies House, and so therefore the name is registered and no one else can use it, which can be again a benefit to a limited company. And then another difference is the way that tax is paid. So as a limited company, the limited company pays corporation tax rather than personal tax. And limited companies don't pay national insurance contributions. And owners, you take the money through PAYE and dividends, which is a different tax rate. And generally you will pay lower rates of tax doing it this way. And then on the right hand side here, we've got sole traders. So sole trader is the most simple way of setting up as self-employed or setting up your own business. And an individual who's the sole trader of business, you're entitled to all the profits and the risks of the business. And as we see in the second point, as a sole trader, the individual owner is personally liable for the losses and debts of the business, but equally the assets can be in your name as well. As a sole trader, the business name can be used by anybody. You can't really register it. The only thing you can potentially do is to trademark any business name that you do use. And then the last point again is around the tax. The way you pay tax is very different to a limited company. As a sole trader, you will pay income tax and national insurance contributions through a self-assessment, currently once a year to HMRC, although this is due to change to quarterly reporting in the next few years. So I generally summarise this as a sole trader is the most simple setup, where all the money and the debts belong to you as a person, and you pay national insurance and income tax. A limited company is a separate legal entity where you are protected from the business debts, and you pay corporation tax rather than income tax. So now let's have a look at the pros and cons of both types of setups, because you might be asking, well, which is best for me and my business? And it can really depend on your priorities and what is most important to you. So let's have a look, and hopefully by the end of this video, you'll have a clearer idea of which is the best setup for you and your business. The biggest benefits of having a limited company is that this limited liability, and what that means is that the debts belong to the business and not to you as an individual. So if for any reason the business couldn't pay the debts, it means that if you own your own house, that is protected, or if you were sued, for example, and the business didn't have enough money to pay, or for any reason your insurance didn't cover you, then your personal assets and money are protected. There is a little caveat to that. If you committed any sort of fraud, then you wouldn't be protected, just to add that in there. The second benefit is that potentially as a limited company, you will pay less tax. This is especially true where your profits are over about the 45,000 mark, or if there's more than one shareholder or director, then the tax will be lower for you than if you trade as a sole trader. Also, as a limited company, there's much more scope for tax planning than there is as a sole trader. So again, we can save you much more tax when you are trading as a limited company. When you trade as a limited company, many people have this feeling that it's a proper company, so you deal with it in a much more professional way than if you are a sole trader. And I definitely have seen that with my clients. When they change to a limited company, they definitely take it much more seriously and look to build the business. If your plan is to sell the business at some point in the future, once you've established it, it's much easier to sell it as a limited company at a later date, because of the way that limited companies are set up, and basically someone can just buy your shareholding. So it's a much easier way to sell a business later on. And it can also be easier to get investment or to get credit as a limited company, because the limited company will have its own credit rating. So again, this can be a real benefit if you feel that there may be a need for investment later on. So a few of the downsides to being limited, because so far we've talked about all the good things. The first thing is the administration is more complex. There's more to do. The bookkeeping is more complicated. So you may decide you want to pay someone else to do that. Accountants' fees are much higher for a limited company, probably 5 times what they are for a sole trader, because there is a lot more work to do. And you must keep business funds separate from your personal funds, because as we've said, it is a separate legal entity and the money belongs to the limited company and not to you. So you need to be strict about keeping the business and your personal funds separate, which can be a challenge for some people. So now let's have a look at the pros and cons of trading as a sole trader. As we've said, the sole trader is a much simpler setup, which means it's easy to set up. You just need to register with HMRC as self-employed. So that's really easy. You can also use a personal bank account. You don't need to have a bank account in a separate name. You can just have it in your name. The administration is much easier because we literally just need to keep account of money in and money out. And so you will find that more straightforward. Also, any money that is in the bank account belongs to you, so you don't need to keep such a close track of what has happened to it like you do with a limited company. The downside to being sole trader is obviously, as we talked about, limited liability. Actually, the debts will be in your name. If the business has any debts, they will be in your personal name. So even if you close the business, you will still need to continue to pay those debts. Also, if your profit is above 12,500 there or thereabouts, your tax rates will be higher, and there is less scope for tax planning as a sole trader as there is for a limited company. So hopefully at the end of all that, you have got a clearer understanding of the differences between limited companies and trading as a sole trader, and also what might be best for you. If you are still unsure as to what's the best setup for you, please get into contact with me. You can email me at hello@thesalonexpertaccountants.co.uk, or you can message me on Instagram. So really make this decision early on in your business journey. Some people wait a year, and sometimes that's too late. Sometimes we could have saved you a lot more tax had we had this discussion before you started trading. So think carefully. If you need any more advice, please do get in touch.